Take a look. This is the 10-minute chart of the US dollar. It looks big. It's not that big, but look at the drop here. I mean, beautiful drop on the US dollar. Now, again, what's going on here? Let's take a look at the 10-year yield. The 10-year yield, little bit of a decline as well. Also, what do you guys think that the S&P is doing? Remember, it's an inverse relationship. So if we flip over to the S&P, take a look at this, little bit of an uptick right here on the S&P 500. And then if we flip over to the NASDAQ 100, also a little bit of a move. If you look at the overnight data into this morning, markets were trending lower, then a little bit of a pop. So why the heck are we seeing this type of action? Let's go over the data. So this morning we did get some economic news to come out, and these are the big events of the morning. Now, this is kind of crazy, folks, but we know this is how the market works. The market wants weak economic news. Weak, right? It wants lower inflation, and it wants people to lose jobs. I know that sounds crazy, but that's what the market wants. Jobless claims came out this morning. Expectations were for 220,000 people filing for unemployment, right? So this was expectations. And what did we get? We got 231,000 people. So a bigger number of people filing for unemployment. What does that mean? It means that more people are losing their jobs and more people are filing for unemployment. That is a weak signal in the economy. All right, so that's number one. We also got export prices, which came in lower, meaning lower prices. That is a positive as well. It means prices are coming down. We saw this with the PPI data. We saw this with the CPI data. We also saw import prices were also lower than expected. Import prices were expected to be minus 0.3%, right? They came in at minus 0.8%. Okay, so again, a lower number. In other words, prices are coming down. This is all coming up roses if you're the Federal Reserve. If you're Jerome Powell, you're patting yourself on the back right now. The question is, and I've always said this to you guys, is what ultimately happens down the line. Do we slip into a recession that the Fed can't cut rates enough for because the market, again, wants basically rates back to zero? Lastly, just a note here, Philly Fed numbers came out. The Philly Fed manufacturing came in better than expected. It was expected to be minus 9. It came in at minus 5. So again, a little bit better on that front as well. All right, so enough on the economic numbers, guys. My goal here is to give you guys the insights into why the markets are moving on an intraday basis so you can understand the inner workings. And suffice it to say, as we flip through a few of these other charts, right? If we go back to the US dollar, look at the dollar drop because, again, we're seeing weaker economic news. Weaker economic news eventually translates into more printing money. The more money that gets printed, guess what the dollar is going to do, right? That's just the nature of the beast. Okay, now the one thing I want to make clear here, and this is a really, really important point, is that there will be an inflection point, right? Right now, a dropping dollar and dropping 10-year are good. The markets are rallying because, and this is important, because the markets view the Fed as maintaining control. In other words, that as of now, the markets believe that the Fed can maneuver if the economy gets too weak to stimulate it enough to get the economy moving back up. However, if we start to see economic news spiral out of control, let's say we get to a point where we're seeing 500,000 people, right? 500,000 people filing for unemployment claims, and the Fed isn't reacting and dropping rates dramatically, maybe because inflation is still slightly too high, this would then freak the markets out. All of a sudden, weak economic news would not be good for the stock market. Right now it is because we're still on that cusp. We're just seeing a little bit of weakening. The Fed looks like they're doing a great job. We will find out in the next 6 to 12 months if that is the case. And I just like to point out, as always, folks, the Fed has never engineered a soft landing. Just throwing it out there. Maybe this is the first time ever. I'm a probability and data trader. That's why I'm skeptical. Okay, so that's what we have going on right now. I do want to get into some charts here. Cisco Systems, guys. Let's take a look at Cisco. Cisco reported earnings yesterday after the bell. The stock got absolutely clobbered to the downside. Look at that massive drop. it has stabilized here around $47.50. Now, what we can see is yesterday it closed around 53, 53.50, so it's down about 10 to 11% pre-market. Now, for me as a technical trader, the first thing I do, I say, okay, it's at 47.50, but I have to look, where was it the lowest point down here after hours? It was around 44.50. So I have to look right around these areas on the daily chart and see exactly where we could have a technical level. So the first thing I do is I zoom out on my daily chart and I start doing some trend lines. So the first thing I would see here is a trend line here that goes right up under there. Now look at that. So what we're basically seeing here is a technical breakdown on the daily chart. Now this doesn't give me a day tradable level, by the way. It's just fascinating, right? Because again, if we look at this level here and we look at right here and we look at yesterday's closing levels, we know now that we are now trading down here. That is a technical breakdown on the chart. Now, while that doesn't give me a day tradable level, it does give me insights into that this is probably in for trouble going forward. Sure, you can get a bounce out of it as day or swing trade, but overall, this is a big breakdown. It's probably not good over the next multiple 3, 6, 9, 12 months for this stock. Okay, next thing, what do I want to do? Next thing, what I want to do is take my my trend drawing tool and I want to put in a trend line here. That's an obvious pivot low. But look, price again, yes, this is below current price. However, pre-market yesterday after hours, we were actually a little bit lower. So while you'll have some support around 45.65, it's not a day tradable level because as a trader, I have to quantify risk. And just knowing that this was trading down around here yesterday after hours makes me too nervous. It's too much risk for me to day trade that level. So I'm going to pass on that level as well. And by the way, what you're seeing me do now is walking you through the steps how I look for levels, right? So now that we've eliminated that, now let's look for our next level, okay? So let's go here and let's see. Okay, well, I do see a gap fill around 44.35. Now, that is interesting to me because that was right around yesterday's lows, so it would be a double bottom, and it's also a gap fill. All right, so again, there's a gap right here. There's a lot of sideways consolidation. And again, this was right around yesterday after hours low. So $44.35 may be a first level where there should be a decent amount of support where the risk versus reward may start to make sense. All right, now again, I'm a dollar cost average trader. So if I do decide to take this level, if it gets there, it would be a small starter position in case it flushes through. Now, where would my other few levels be? Let's just give you guys them right now. Then we're going to move on to a couple other big movers. The first one is this pivot high right here. All right, that is right at 42.15. That would be another technical level. You have another minor level around 39.90. I like that because it's the even number of 40. And lastly, we have double bottom. So all of a sudden, guys, look at what we have now on the charts. We now have multiple technical levels. And I'm going to actually erase this one because this one, remember we said we didn't like that one. Here are your multiple technical levels on the charts that we can start looking at. This would be that first potential level at 44, then at 42, then at 40, and then around 39 to 38.75. Those are your technical points of interest today. All right, so again, this is now talking about how I would trade this. I'm going to debate during market hours how it trades if I want to trade that first line. If I don't, or if I do, that's fine. If I do, I start with probably 1, 2, 3, 4. I probably start with a 1/5 position. So a 1/5 here, okay? Then a 1/5 here, okay? Then a 1/5 here. All right, so now I'm up to a 3/5 position, and then I save my last amount from my biggest buy, and I do a 2/5 position there. That equals a 5/5 position. Overall, if I do that, my average is probably right in here. You should easily at some point get Cisco, which is a great company, to get a technical bounce. And by the way, this is the worst case scenario if it dumps out. In fact, even at this lower level, this is probably a good short-term swing trade, even if you want to hold it for a little bit. So again, this is my mind translated to you guys how I look at these levels. All right, lastly, we got to talk about Walmart, guys. Now, Walmart. remember Target yesterday. In this very game plan, I walked you guys through TGT. In fact, we're going to flip over to that chart right now and why the chart gave you an idea that it could be a buying opportunity. Remember, going into earnings, you want to look at where a stock has gone. So on this chart of Target, remember yesterday, pivot point to pivot point to pivot point to pivot point, and basically we had come right into that going into earnings. Look at the stock having declined going into earnings. All right, that means to me that expectations are really low. I love it when a company has low expectations. All right, it's like, think about it from my perspective. If I want to run a marathon, or if a marathon runner wants, you want people to think you're slow, in my opinion. You know, you want to be underestimated, not overestimated. This chart going into earnings was no doubt underestimated, right? It was way down here. What did it do? It went up like 18% yesterday on earnings. Okay. Now, case in point, my point of bringing up this is to show you guys the Walmart chart. Now, if we look at Walmart, it's almost like the opposite chart, right? So if we look at Walmart, look at this here. We had pivot point to pivot point to pivot point all along here, and we were basically going right up into it. We're talking like multi-year 52-week all-time highs basically on Walmart going into earnings. So let me ask you a question. Is expectations high for earnings or is it low? Well, price action has rallied up into earnings. It means people were continuing to think it's Walmart. They're going to do better and better and better. So let's buy the stock up, which means they have to perform even better to keep going up. And the answer is it becomes just such a high bar. Probabilities are that they won't be able to put out numbers good enough. What is this stock doing here? Well, you guys can guess, right? If we take a look at the 10-year, what is it doing? Look at this drop on Walmart, dropping all the way down, hitting almost 155 today. By the way, I had an order out there just below 155 for a day trade. Didn't get filled. It went just basically right to that level. That small bounce here, but let's look at levels. So where are we looking at levels on Walmart here? And the answer is, for me at least, again, we're trading around that 150. Let me just flip back to make sure I have it down. So 159 right now, but the low is around 155. So what I would do is I would start taking a technical trend line here, and I'd bring this up to this low here. So notice that, right? Pivot low to pivot low, it's at around 154. So 154 would start getting me interested today. If it gets through 154, you have your double bottom at 150-170. And again, those would be my two big levels on the day on Walmart. Again, notice how I'm finding these levels. I'm just playing connect the dots up. That gives me 154, and then a double bottom here, draw a straight line across 150-170.